All right, so this is going to be a little bit more in-depth tutorial just to explain the terms that you're going to see on the app in your Magic Ball there. So first thing you'll see is token. And so what that token is just, it just means cryptocurrency. It just means the token or the cryptocurrency that you're trading with. So for example, um, in this situation here, we're trading with up here in the corner Bitcoin, BTC. That's the token that we're trading with. And the next thing is the move. Move just it refers to the direction that we think that the price is going to go. So this is a downward move, obviously. This is an upward move, obviously. Um, when it's downward like this, it's called a short trade. Short trade. When it goes up, it's called a long trade. So when that move says long or short, it's just saying which direction do we think this is going to go. If it says long in that move, we're expecting the price from here to go up. If it says short, at this point here, we're expecting the price to go down. And there might be like a little jiggy-jaggy. It's not going to be a straight line. It could be all over the place. But we expect the overall move to be down. Next thing you're going to see is leverage. And in this kind of trading that we're doing, we're not just buying and selling these, we are borrowing against our money. So, for example, and I'm not going to get too deep into this, but leverage just means how much are we going to lever up, just like borrowing. So, if you have $1,000 and you have a 10x leverage, you are borrowing $9,000 to amplify your winnings or losings too, depending on which direction it goes. And so that's why it's very crucial that you set a stop loss, and I'll get to that next in a little bit. So leverage just implies that. Are we doing like and it can be 1, 2, 10, 20, even some people are crazy and they do 100. But I exercise really a strict risk management, so you'll probably never see anything higher than 15 probably. And that's if I am just very sure about it, but you'll see. So that's what leverage means. You'll see that on there. The next thing is order price. Also known as entry price, and that's this section, and that's this right here. That's just where we're going to enter the trade at. So when this price comes down to that point, we're going to get in, and we expect, because it's a long, that we're going to go up. So right now we're lying in wait down here at this price point. So then that's the order price. That's what we're getting in at. The next one you're going to see is take profit. Obviously, just like it says, that's the one we're going to exit the trade. That's another way of saying it. When the price comes down, when the price goes up to our point, we exit. We have a trade already ready to go, and it exits for us. The next one you're going to see is stop loss. Really, really important one. That's down here in this part here. If we were wrong, in our trade prediction, and the price keeps going down and going down and going down, it means that instead of losing all of our money down here, it just cuts us short here. So stop loss is very important because we don't want to set our stop loss way down here and we lose more money. I try to keep a risk to reward ratio of 2 to 3 optimally, 2 if I'm just so sure, but I want to have a nice buffer. That means that, as you can see in this here, our risk to reward ratio is 3.5. So that means that if I'm right, I make 3.5 times what I was going to lose. So my risk is my reward is 3.5 times what I was risking. So if I was risking $1,000 on this trade, then I would only if my trade was for $1,000, and let's say I set my stop loss here, my risk isn't gonna be the full 1,000. It might be like, let's say my risk is 100, so it's 10%. And that's about what I usually do. So my risk is 10%. So I'm going to lose 10% if I'm wrong. Now, if I'm right, then my profit will be about 350. And that helps us to, even if you're at a 50% accuracy rate, meaning that only half of your trades are accurate, you're still going to be making way more because your wins are 3 to 3.5 times or 3 times better than your losses. So that's kind of how that works.